BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Hello everybody, welcome back. Let's have a look at these charts then, shall we? We're starting off with just a bit of simple Bitcoin rush. So yesterday, after talking about the potential of retesting a death cross, we shot straight up to it. Not that I predicted that, we're just saying that these things often do happen. We front run it by just by a tiny smidgen. I mean, literally, you could fit a Rizzler paper between there, so the target was front run to the tune of 0.13%, 0.13%. Fair play. Now we've got the death cross. It would normally suggest strength of trend forming towards the downside. But look, the $26,000 zone, the top of this support, is supporting it quite nicely. The bottom of the range is also being supported quite nicely. It's 25,364. So all of this area right now currently sits as a buy zone, and all of this area right now is a sell zone. So basically we're getting squashed in what is effectively going to become descending triangle. The reason I say that is because this is the direction of the 200 exponential. Roughly is going to look a bit like that. 50 exponential is going to be a bit steeper, a bit more like that. And we've got what I would imagine to be about a couple of weeks to decide which way we want to break. Descending triangles often do break down rather than out, but they can they break out all the time, don't they? Let's face it. So on the higher term time frames, being like a weekly, obviously it's below all major moving averages, not looking particularly good. It's only the 200 exponential and the 50 simple that's below us. If you really want to take it even further, we can have a look at the monthly. 50 exponentials below us here. Are we going to bother with anything else? Well, we can't actually on this chart, so it's no big deal. Right, so let's think about the shorter term time frames then. So the 4 hourly avoided its golden cross, so it didn't actually get that. But so far, after the big move up and then straight back down yesterday, looks like a liquidity grab, but basically we're back down to square one again. We're creeping back up as of right now, above almost every moving average. It's only the 50 and the 200. Again, death cross retest if it were to do it. And so we're back to the same analysis that we had yesterday. No different really. Which is the criteria for major breakouts on the 4 hourly will begin with closures. Again, remember this is an important aspect of it. Closures above 26,600. Yesterday we went above it. And yeah, straight back down. So I mean, there was no support there whatsoever. Just came straight back down to where it started from, and now it's sort of moving a little bit up. Now momentum's still good, right? The momentum still points to the up. No bearish divergence. Not that we have had any chance to do that. And the daily momentum's still good as well. And if we think about where we sit currently on the daily, above a Bollinger Band, which gives us a 65% more likelihood of remaining above the band. So there is a good chance that we still stay above this level. 26,371 being the main area for continuation down. Closures on the daily at that level or lower would probably indicate further downside, but again, that's no different to what we see here on the 4 hourly as well. So it's a very important level. 26,300 we'll call it, just give or take, more or less. So we're not far from there right now, but you and I can gloss over all the charts and we can see that actually some of these altcoins are pointing up, or at least going up at the moment. Bitcoin Cash, remember we were looking at this on the Patreon live stream if you want to join that. This was I say a clear breakout, but it was looking quite good. There's obviously a lot of charts out there that don't look like this, but this one had a big move up, consolidation down, golden cross retest, double tapped it again, reclaimed Bollinger Band, and is going up. And we've already hit the first target. Second target's going to be 250, and then probably the top target's going to be between 280 and 300. So that looks all pretty good, really. So not all altcoins are created equal after all. This one wants to do its own thing. And again, look, you think about Bitcoin Cash, this is like just one of those anecdotal things. This has a halving, more or less at the same time as Bitcoin. It's one of the altcoins that's, I suppose, one of the big altcoins that's got its halving next. And so, yeah, we had this huge, massive move. Big consolidation and a technical breakout with fundamentals to match. If we actually close this candle body a little higher than where we are right now, we'd actually have a pump signal on the Itchy Cloud, so that's pretty good. Obviously Chainlink continuing with its strength, all obviously still within the context of the accumulation zone. Been saying this for 18 months now. Buy this zone, buy this zone, buy this zone. So yeah, we're still in the range now. Basically, we're at the upper portion of the range, finishing around 940, which would be the top target on this current run. But breakout from there, absolutely epic, awesome stuff. Right, so if you're still with me here, we'll have a look at some traditional market stuff, a bit of forex and stuff. So let's have a quick look at the S&P to see if we had our expected reaction yesterday. Give us our yesterday we actually did push down below it and bounce back up from the 200 exponential. So exactly the same analysis as yesterday for this one. I am looking for further upside on this one, a bounce on this one. That's what I'm looking for, basically given to us by a golden cross retest, which hasn't been retested yet. This is the first time we've seen that, so we'll be looking for a bounce up on this one, maybe into the 4,400 zone. Right, we've got gold, which really has gone to wrecked city without any evidence of a bounce on change of momentum. So to be fair, it does actually look pretty poor. It's going to be a direct response to the Dixie, which is now pulling back a little bit now that the UK markets have opened, and yeah, probably look for a support around this area, basically where we are exactly right now. We lose that. This is only a 4-hourly, a tiny bit moved down, but really it's a bullish chart. No bearish divergence on this. This is just basically UK markets doing their thing for the moment. The daily does appear to be quite heated here, which does point to a bit more down, possibly all the way down to the 10 exponential, and at best back down to the major area of support, which was the breakout zone, the 105.3. Probably a bounce from there if we get it. So there is evidence on the Dixie to say that maybe we do pull back down to those levels in the context of a bullish move, obviously by the dip on that one. So let's dig a little deeper. We'll go to the euro dollar, see if there's actually any evidence of change of trend on this one. So again, we're seeing the bounce on this one at the moment on the daily without any divergence at all. We're seeing plenty of divergence took place previously on the 4-hourly, but no follow through. Yeah, we might start to see a creep back up to 106. Again, not looking particularly good, but probably will see some upside on this one in the form of a bounce. Again, I wouldn't really expect us to bounce any higher than this major level over here. This is a wrecked city chart, really. That's basically all there is, really. We can have a look at the yen. Yen is approaching its 150 area, which previously did have a decent reaction, but also the reaction there was from an extremely overheated money flow index. As far as talking about forex is concerned, you would never normally see money flow indexes reaching these levels, but this one certainly did. But regardless of that, yeah, it's still trending up. This is still a strong trend. This is a historical area for a rejection. Probably looking for one, or at least a pullback from here. Maybe not in the same way that we saw the last one, but a similar kind of pullback. We've got plenty of bearish divergence on this daily now, and if we did pull back, it could be pretty big. Operative word being could. Maybe a pullback of around 5-6% down to that 200 exponential, and again, it would just be a buy the dip. The dollar is bullish, right? That's basically it. So long story short, as I was saying yesterday, we're looking for, over the next 24 hours, some upside, is what I said this time yesterday. And judging by the charts, we do have some upside already on crypto. Still, I think we can continue this because Forex has been slow. We might be looking for another 24 hours of upside, and then we'll reassess the situation in 24 hours. Right, thanks for watching. Hope you have a nice day. Take it easy.